Simon, just on that, I suppose it's just an observation really, was that the difference between when they are sort of whole market falling, that they're big drops, and looking at these, this is just something that's just occurred to me really, and looking at them as we normally do within trading because it's what we're doing at the time. And on those occasions, part of them is wanting it to fall and so on. And whereas at the moment, there's the insecurity, but there's also insecurity amongst the big boys as well, because even though they can manipulate things, you get to a point that you can't actually manipulate. It's just got this mind of its own. And I suppose that's why, in a way, you're probably getting these repeating patterns that you're forever moving, isn't it? Or do you just want...
No, I agree with that. I do. Because this sort of leads to the next point where, at the same time, yes, I can make comparisons that really we're only in this stage of, the comparative 2018 bear market. But at the same time, I could equally also say that we're actually in this part of the bear market where we had the odd, sort of fake out rally whilst the miners were capitulating. So here we had a multi-month period from sort of June to mid-November where the price of Bitcoin basically didn't do anything. It just went sideways at around 6,400. And so I equally think that right now Bitcoin has done nothing really since June. So from June till now, Bitcoin's just sat around 20k doing absolutely nothing. So when you look at the hash rate, so not the hash rate, if you look at the difficulty rate, where's mining? Look at this. Like, this is what I stumbled across yesterday, the previous trading pub. So if we zoom in over the last couple of months, it's hard when you zoom in like that. Probably easier just to look at this bit here. I'll take a screenshot. Stand by. Bitcoin since June has basically done nothing. It's gone sideways since June. But what has the difficulty? Difficulty has gone absolutely sky high. It's gone from basically this level to up here, which means miners are having to use a lot more energy. And basically, what this just shows us is that the cost of mining since June has gone sky high. Just from a mining perspective. Then when you add in rising oil costs, rising natural gas costs, rising energy costs full stop, that's also just added more on that. So not only is the price of energy going up, the difficulty is going up, and therefore the cost of mining is going up. Now, I know before someone goes, yeah, but not everyone is using fossil fuels to mine. I get that. But it's still, even if you look at renewable type stuff, it's only about 50% of all miners, that is. Don't get confused with I think there's a stat, something like 78% of Bitcoin miners are renewable. That's incorrect. It's 78% of Western miners are renewable energy. But there's still a shit ton of dirty miners out there. So roughly 50% or maybe 51% of all miners are still dirty miners, if that makes sense. So we still are in this band of miner capitulation risk here. Which, again, this is why I'm still bearish. Despite me saying we could see a little pop up to 25k, it doesn't change anything. It doesn't change diddly squat.
Sorry.
Hey, man.
We kind of went into similar kind of details this on Tuesday, and I've just posted a thread or a Twitter thread in Avenger Recordings from a guy we were talking about on Tuesday night, and we were just saying how mining firms are struggling, and one of the biggest ones, Core Scientific, they've effectively halting all debt financing now, and they reckon they're going to go out of money by the end of this year. It kind of feels like the timelines in that fractal is it kind of exactly the same. You talk about miners capitulating November, December time, we see that 50% drop. It's weird how the patterns are lining up again. I'm a bit like you. I don't always like fractals, but it seems to be playing out exactly the same.
Also, The midterm elections in 2018 was the 6th of November. So just before the midterms, what did we have? We had a major fake out, didn't we? Then the midterms happened, and then boom. Literally, this is a weekly chart, don't forget. And then we had, minor capitulation. So we had the minor capitulation risk. We won, economically speaking, it wasn't actually that bad in 2018, was it? We definitely didn't have the raging war, raising inflation. The economy was on the up, and we still had. Sorry?
Didn't we have that Boxing Day blip? There was something on Boxing Day, wasn't it, in 2018? But that was about it. Other than that, I think the world was generally pretty good.
It was everything was on the up. GDP, everything. And we still had a massive 50% crash. Because midterm elections, they're over. Mining capitulation risk, etc., etc. And so when you bring it back to where we are now, and why I'm still freaking bearish despite what's happening with this very small price movement, is that the midterm elections, let's look at it on the daily chart, and let's just draw 8th of November. Boom, there we go. Oh, damn it, I moved it. There we go. Midterms are there. Having a nice little rally into the midterms looks good for the politicians, doesn't it? And then maybe everything just capitulates. Wait, so did you say Avenger Recordings?
Yeah, that's right. Avenger Recordings. It's there's a couple of links there. Dylan Leclerc. This is the one.
Oh yeah, he's a macro guy, isn't he?
Yeah. He used
on
to,
chain, sorry.
Yeah, that's right. On chain. He used to be sort of had the verification tip, but he got it taken off him because of a COVID comment he made. But maybe he's going to get it back now that Elon's taken over. But he's well respectable kind of guy. So
cool. So let's read it. One of the world's largest Bitcoin mining firms, Core Scientific, is halting all debt financing payments. First of all, when was this? 27th. Today. Interesting. I'll read it out. In addition, the board has decided that the company will not make payments coming due in late October and early November 2022 with respect to several of its equipment and other financings, including its 2 bridge promissory notes. Ooh, okay, that's basically a loan, by the way, short-term loan. As a result, the creditors under these debt facilities may exercise remedies following any applicable grace periods. That to me sounds like the creditors have some sort of option where they can call in money or liquidity, including electing to accelerate the principal amount of such debt. Okay, yeah, that's basically what that just said. Suing the company for non-payment or taking action with respect to collateral where applicable. Okay, so just dissect that bit. It's basically saying that they're going to basically try and look after the creditors as much as possible to effectively, as it says here, including electing to accelerate the principal amount of such debt. So what this means is if there's a mining firm that has, let's say, a 5-year loan, they're saying that they could try and accelerate that. Instead of being a 5-year loan, let's make it a 2-year loan because they want to protect the creditors. Okay, cool. And if there are any non-payments or defaults, yada yada yada, yeah, taking action. That's legal action. Any such creditor actions may result in events of default under the company's other indebtedness agreements. Okay, so by failing payments or any of these new, accelerated principal amount repayments, etc., it means that they're then defaulting technically on all of their other agreements. Whew, that's a key bit there, folks. Any such creditor actions may result in events of default under the company's other indebtedness agreements, including its 2 series of convertible notes due 2025. Holy shit. And the potential exercise of remedies by creditors under such agreements. Ah, wow. Okay, so a convertible note. So just to try and put things in English, a CNA is called a convertible note agreement, and it's basically a loan that converts into equity if certain measures are hit. So, I use convertible note agreements all the time. Well, all the time. When I was doing M&A quite a lot. So basically, what happens is there's a company, let's say Biz, they're trying to get capital from, I don't know, let's say there's an angel investor, which I technically was. Well, not technically, I was an angel investor. So what happens is the angel investor doesn't know this business for diddly squat and has issues with, let's say, the future prospects of it all. So this business is saying, hey, we're going to do, you know, this, and this by this deadline, right? The angel investor then goes, it looks good. If you nail them, hell yeah, I want to be on your team. But I'm skeptical that you can actually hit them. So what happens is most angel investors will do a CNA, a convertible note agreement. Let's keep it easy, 100 grand. And the convertible note agreement will say, look, if you can hit all these things by this deadline, this 100k turns into equity, and you would have had some sort of strike equity, like, you know, if you can hit all this, that 100k turns into, let's say, 10% equity, and then I'm now an investor. And this helps the business because if you don't hit those deadlines, this business is now lumped with a 100k loan at, probably quite a high APR, right? So for me being in the angel investor situation, I always made sure that this default would turn into a very juicy loan proposition, so that you're sort of mitigating your risk. And at the same time, you could then have a debenture over the whole business. So a debenture is basically, Mousetrap, the game, when you're playing a kid? A debenture is basically this big old mousetrap that's hovering over the business. So a very normal term for, with CNAs is that, look, if you don't hit these deadlines, which you say you're going to hit with your fancy spreadsheets and all, this converts into a 100k loan at 20% APR, let's say over 2 years or something like that. And if you default on this loan, I have a debenture over the business. So if you screw up this, let's go back to 100%. If you screw up my loan, so first of all, if you screw up your deadlines, this turns into a loan. If you can't pay my repayments, there's a debenture over your business and I get your business. That's what a convertible note agreement is. So obviously, it doesn't have to be as aggressive as that. None of my deals were that aggressive, but there are many people less fluffy and gentle as I am.
Siam, before you go on,
yeah.
So Core Scientific down 69% today. It's CORZ.
Jesus. I thought it was a random spec, but it's actually 70% today. Huh. How interesting. Yeah, so that means, let's go back to this, let's finish this off. Any such creditor actions may result in events of default under the company's other indebtedness, blah, 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 including 2 of its convertible notes. Yeah, and the potential exercise of remedies by creditors under such agreements. Interesting. Cool. See, this is why, this is a completely random point. This is why I say you should never just be a trader. You should always try and become a business owner and a trader. Because you just learn loads of other stuff in business. If I was just a trader, like 99% of crypto dabblers out there, they wouldn't have a clue of what this actually means. But now, as I've explained, this is clear as daylight. This is not good. So what? Yeah, and then when you tally that up with this 70% drop overnight, you can see that behind the scenes, this company is scrabbling, basically. So the next question I want to know is, what mining companies have they given money to? Again, this is new to me. I haven't. What does he say? Blah, 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 blah. Holds 24 Bitcoin, selling over. Oh, okay. Oh no, they don't hold that much Bitcoin. Yeah, because what this means is they may actually have to sell some of their Bitcoin. But if they only own 24 Bitcoin, but they've sold 1,000.
Simon, if you look at the chart, they have one of the that's the top 10 public miners, and they have one of the highest percentage rate of all hash rate. They keep on selling all their Bitcoin. They actually only have 24 Bitcoin left. I don't know how verifiable this is. But
Are you saying Core Scientific, this company here, has most of the hash rate?
go back to his Twitter and just click on that. On your right side, scroll down. Where is the chart? There you go.
Oh, Jesus Christ. 5% of... Wait, let's read this. Share of Bitcoin's hash rate, 5%. Marathon... Oh, okay. Oh, that puts in... Jesus. Marathon's pretty big, so is Riot, and so is Argo. I know those. I'm not familiar with these other ones, but I know... So this is basically Marriott... Sorry, Marriott? Riot and Marathon combined. That's a pretty big deal, folks. Interesting.
I mean, guys, it's probably not for now. But if you are interested, just click on his link. His last sort of 24 hours, week's worth of posts are all kind of about this. So
Dylan Leclerc. Cool. I will give him a follow. Good spot, mate.
Just to put it into context there, that chart total was only about 18 to 20% of the market, but that is the top 10 of the public miners. So the assumption must be there's some pretty big non-public miners around.
I agree. So yeah, good spot by him, and also a good spot by you, Harry, finding it. Nice one. I'll have to have a little read through. But yeah, so it goes back to my thing. Although we're rallying somewhat, I'm still bearish. I'm still very, very bearish. And last, 2018 $6,000 level is today's 20k level, if that makes sense. But here's the thing: when you read crazy Twitter stuff like that, you think, "Oh my God, let's short." Stuff like that takes weeks to play out, folks. It takes weeks to play out. You're talking legal action there, basically. They're threatening basic legal action if they don't agree to, accelerating repayments, all that sort of stuff. That shit takes a long time to play out.